Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. We're going to run through Twitter, see what's going on the Twitter's financial space, dealing with commodities, stock market related information. Obviously, I'm going to interject my opinions all over this, and let's see what's out there. And again, if you want to follow me, it's at finding_finance. That's a way that you can follow me. And if you want to join the website, it's finding-value.com. Become a platinum member if you want to join. And you can use the word discount in the coupon code. So let's dive in. We got Charlie Balello. It says the net worth of U.S. households fell 4.1 trillion in 2022, the second largest decline on record after 2008. Says this is a relatively small decline following the 2019-2021 record years in which households' net worth surged. So we had some massive years of 19, 20, and 21 where households just, their net worth went up ballistically. We can kind of see this coming on up. And here's another thing to kind of think of. And I know people just look at that, it's down. And they're like, oh no, look at the trend here though. This trend going up is really starting to move with some speed in terms of the annual changes. So I do think that money's getting pumped into the system. That's how these are changing so rapidly. But conversely, last year it did go down. Increasing interest rates and a lower stock market and bond market did not help the net worth for the U.S. households. But it's interesting to note we had a down year in 2002, and I think that's where we're at potentially here. 2022 is most like 2001 and 2, somewhere in that range, is what I think. So coming down here, here's another one. It says the median price of an existing home sold in the U.S. is down on a year-over-year basis for the first time since 2012. And what's happening is home prices are basically going sideways, and the base effect, the year-over-year change, that base effect is coming on up. And I said sometime in March or April, we could get a negative number. And here we are getting a negative number in that time frame. Now, it doesn't mean that home prices are crashing. It just means that home prices are leveling off. Does that mean that home prices will go down or up? I don't think looking at prices, you can determine that information. I think a better indicator would be which way is mortgage rates going to go. If mortgage rates go down, I think this is going to go up. If mortgage rates continue higher, I think that home prices will continue to go down or sideways, either one. Looking at this, where he says this, Pierre Andurand of Andurand Capital sees oil price at $140 per barrel at year end. I put this in here just as like kind of an eye opener. I'm not stating that's where it's going to go. I don't know where the price of oil is going to go with any certainty of a price and a time frame. All I know is I think it's cheap and I think it will go higher over time. That's the way that I view things. And then you can use ratios to determine where the psychological threshold limits are. Obviously, it's not $140 a barrel. It's probably more like 440 or 500 or something like that, where humans put this psychological cap of an oil to gold ratio at 1:6. And if you're at a 1:6 ratio and you're at, $2,000 something for gold, then yeah, you're going to get to some pretty high numbers of things that are over 350 per barrel. And again, I don't know if we're going to go there. I'm not stating that's where we're going. I'm just saying, you know what? If we hit 140 by year end, that's on the trajectory for that type of move. Scrolling down, it says, did we just pull through the housing transaction trough? Total existing home sales vaulted 14.5% from January to a seasonally adjusted annual rate of 4.58 million in February. So the total existing home sales is rocketing on up 14.5% from that time frame for existing home sales. Here's Pado Energy is a oil and gas company, and I just sharing this. It's a single company, but we are coming out of this trend. You know, it's basically a flag pattern, and we're breaking to the upside of this flag pattern today. I'm getting pretty bullish on a lot of oil energy service companies with patterns that look like this. Definitely. Now here's ACO priced curve. Price curve is what it should be. So here's the price curve. And if you look out into the future, the blue is the current one. We can see a dramatic shift in natural gas prices moving higher is what the markets are pricing. And in the short term, they still think that we are going to have some weakness up into July of 23. Then we're going to get some strength of natural gas prices going forward. They are still pricing $5 natural gas out in 2026. Now, obviously, these entire curve moves dramatically over time. This isn't like any sort of forecasting price mechanism or anything like that. But we can say, yeah, the curve, it's going up. They think that the pricing out in the future is going to be more expensive than what it is today. So maybe that crisis will get behind us and we have higher prices ahead of us. Here is Grady says, that's a huge purple bull flag breakout and backtest for big dog royalty company Wheaton, sitting right on the black support line. So here's Wheaton Precious Metals. We've got the flag pattern here, and we've broken to the upside of that. Much like Pado Energy and a lot of these other companies that I'm looking at, they're throwing in these patterns, they're breaking to the upside, and a lot of them look very good. Wheaton Precious Metals is a royalty company in precious metals, and a lot of the energy companies are obviously in a different sector. They're also looking good, and you can see a lot of these patterns even in other sectors in commodities, which are continuation patterns to the upside. Here's Eric Nuttall. He says, I agree. Oil fundamentals are getting more bullish. Underground oil price drop isn't driven by fundamentals. So I've talked about this before. We've got the structural market conditions under the market that are fundamentals. The fundamentals are driving the markets forward. In the short term, you can get headwinds that are of fear in the market or other problems that can happen, a recession, where they drive prices lower, even though the fundamentals are good. And I think what they're saying is that is the exact thing that we're seeing today. Fundamentals are good, but the price drop that we've seen is not driven by the fundamentals. It was driven by fear in the market and other things. SGR, so that's the silver-gold ratio here, which is a reverse of the gold-silver ratio, has a cleaner pattern than the GSR. Mega backtest to black line in the making. Big moves take time to build up. This chart is getting ready to deliver a historical up move for precious metals. So this is silver. So it's silver first versus gold. And if silver outperforms, it moves higher. What he's saying is this is 1, 2, 3, 4, 5. It's a 3-wave up move, which we call Elliott wave. And he's thinking that that could potentially be how it moves in this next bull market in precious metals, where silver vastly outperforms gold. I've done a lot of analysis with ratios. I also think that silver is going to do some crazy stuff coming up. I see this inverted. I do the gold to silver ratio, and I think it's going to compress down. So silver is definitely a good one to be looking at for a long-term investment, or long-term being the next 4, 5, 6, 7 years. Now, Tavi says, and I agree with this 100%, this is one of the things that I use to invest in 2020 and catch that bottom. It says, this remains the most important macro chart of this decade. Parts of the investment thesis are already playing out. The growth to value transition, failing 60-40 portfolios, that's bond and stock portfolios. Commodities, super cycle, peak cheap energy prices, the bursting of speculative and expensive tech stocks being re-rated. It says these trends are all interconnected with the idea that monetary conditions are too tight for financial assets at these valuations, but too loose for secular inflationary forces. So they're in a conundrum. Interest rates are too low for it to stop inflation, and they're too high for a lot of these speculative bubbles where they're going to prick those bubbles. But they can't stop inflation because it's not high enough. And what's happening is we are going to move probably higher in this ratio where commodities are going to outperform equities. And this is what I use to gauge the valuation of commodities. And if you look and you draw a line going across, we're basically back in the 1970s type era, 72 Nifty 50 stock bubble, where we could get a big old move in commodities in relationship to equities. Coming on back to what I'm sharing. So here's another one. It says, a stress in the banking system marks what is likely to be the beginning of a painful and vicious end to the bear market for U.S. stocks, says Mike Wilson. Morgan Stanley strategist says bank stress signals bear market end. And he might be right in the short term. I do think stocks could outperform in the short term. A lot of people are pretty bearish. It's generally when you get a stock market run. I don't think that it's going to be like the beginning of a big old boom. Usually when that happens is after the housing market crashes. It brings everything down, you get a big recession, and then that's the time you load up on tech stocks and ride the interest rates in a low interest rate, low inflationary environment. Tech stocks take off like no other. And we're going to play that trend when it comes, but it's not here yet. Yeah, I talked about this one, this bull trap. I did a full thing on it. It says the antidote to fear is facts. While banking sector panic-induced crude liquidation may continue, leading to still lower oil prices when the dust eventually settles, what do oil fundamentals and energy stock valuations look like? Some thoughts. This is the financial sector in relationship to energy. Moving on higher, you can see the correlation is breaking here in the short term. We also got here, it says, amazes me the level of complacency amongst investors toward FANG stocks when fundamentals continue to deteriorate quarter after quarter. Median revenue growth is about to turn negative for the first time while these stocks still trade at over 22 times earnings. And here's the revenue growth coming on down. That's not a good setup there. It's going to go lower in my opinion, but that's the setup. That's what we got. Here's gold-silver ratio inverted from Grady's chart. You can see that we are expecting a compression where silver is going to outperform gold. We've got uranium miners or altcoins for the next year or two. What do you think? Poll attached. I think we're going higher. That's what I think. I think Camco wins, and I think altcoins, yeah, I don't think they're going to win. I think it's going to be Camco. That's my take. Commodities. Here's markets mayhem. Now, here's something that I think is really, really interesting. So this is no equity capitulation, cumulative global equity flows. Now, I want to point something out here in terms of a chart pattern. We watch a lot of chart patterns, and what there usually is there's three waves. There's 1, 2, 3, 4, 5, 6, and then you get this little hump, and then you get a big launch. Sometimes it launches and it kind of goes up multiple, in waves. This one just launched straight higher. So I'm not really worried about the cumulative global equity flows. I was just showing you that there's these waves, 1, 2, 3, 4, 5, 6, 7. And what this is called is the Jesse Livermore accumulation cylinder. And I'm seeing it in cumulative global equity flows. I just thought that was real interesting. Now, here's another thing. What happens is this goes up to a certain point and then it will crash back down generally. But I don't know if global equity flows follows that type of crash. We might just go sideways for a little while. And then when money's printed or created, it continues to go higher and we don't get a deflationary type exit or crash. But that's all I wanted to cover for today, guys. And that's a lot of info for today. Where do I think things are going? It doesn't really matter. I think things are cheap. The stuff that I follow are. I think natural gas is incredibly cheap. I think oil's cheap. And the way you make money is you buy when things are cheap. I mean, that's it. And it's not advice or anything like that, but you have to buy it when it's down, and you have to buy it when nobody wants it. And you have to buy it when, you're not excited about it. And you have to change your mindset where you get excited when things are down. You're waiting for things to go down, start to come back up, and you want to load into it because your strategy or method allows you to accumulate when it's cheap. People don't make money when you buy expensive and sell low. You want to make money, but you make money by buying low and selling higher. And it's very tough to do because it's like we're wired to follow when things go up. That's when it catches your attention. But it needs to catch your attention where you're looking at chart patterns, not price movement. And the chart patterns should be catching your attention, saying, okay, this is where I should load up. And it just takes a little bit of experience. It takes a little bit of time. And usually when people start coming out of the woodworks and start saying that, commodity super cycle's dead, it's not going back up, oil's going to $40 a barrel, you get all these people coming out like that. And, that's generally when I start to buy, because if you can look at things objectively through ratios and you say, okay, the oil to gold ratio is cheap, it's priced at 30 or so. It was priced at 30. Then it's cheap. And then I'll start to accumulate oil. I don't look at these things as I need to make money or I need to make cash. I look at these things as, where do I want to store my wealth? How do I preserve my wealth? How do I protect my wealth? How do I grow my wealth against other assets? That's all I look at it. And then it becomes quite easy. It becomes a little bit easier, maybe not super easy, but it's easier. And then the question is, if I were to sell this asset, what else am I going to buy? And a lot of the times it's like, I'm not going to buy anything else. Why would I sell it if this is something that I really want to be in? And I want to, be in this investment. And if I sold it, where am I going to go? It's nowhere. So I just hold on to it. It's that easy. So that's what I've got for today, guys. If you like the content, give me a thumbs up. If you guys want to check out the website, check out the website. Up to you on what you want to do there. And love to have you in the community. We're all kind of rowing together, I think, to some extent. You guys can see my purchases. I'm starting to put what I purchase and the price that I'm purchasing at. And you can see all my transactions basically in one post that's stickied at the top. There's like 4 or 5 stickies at the top of posts, and then it goes by chronological release date underneath that. So you can see what I'm doing, what I'm buying. You can see how successful I am or not by looking at what I'm buying. But that's all I've got for now. We'll catch you guys next time. This is Finding Value.